What are you investing in?
Nothing's changed for me. Nothing. I was prepared for this crash. And that's, I think, the most important thing. I've had some setbacks in some of the businesses where we lost our employees and stuff like that, so we've not made as much money.
Hmm.
Personally, I'm doing well. The number one asset I have is what's between here and here.
Hmm.
So when people say, "Well, what assets do I have?" Well, I wrote a book that sold 48 million copies. You know how much money that makes me? I also have 8,000 pieces of real estate. I own hotels. And the hotels are the ones that are damaging right now because they're empty. But that's part of the business. I own golf courses, oil wells, and all that stuff. But I'm a professional investor. That's the difference. I'm making more money than ever before because other businesses are doing well. And my concern is, Prince, is that what happened in 2008, the market came down and went into a V. The reason it went into a V was because the Federal Reserve Bank and the US Treasury injected trillions of dollars to keep it from crashing. So they pumped it up into another bubble, the biggest bubble in world history. And that was a prediction I was making in my book, Rich Dad's Prophecy, that in 2016, the biggest crash would come. But I did not foresee how much quantitative easing and how much zero interest rate, they were going to do to keep that bubble high. So the real estate market blew up, stock market took up, blew up, and the bond market blew up. So in 2020, all three markets crashed, March 2020. So right now, instead of bouncing a V, excuse me, instead of a V,
It's gonna be like a U.
and some people think, well, it's going to be a W, it means it bounces, dead cat bounce, bounce up. So some people say, well, it's going to be a W recovery. And I think it's a possibility, probably about 20%. It goes L, it
Ooh.
crashes and goes into a depression. So we're actually more closer to 1929 than 2008 in the crash. So this might be a long crash. One more thing, because this is my study. I never did well in school. I was a C student in school, but I understand money. There are major crashes every 90 years. Every 90 years, there's a major crash. So the last major crash was 1929. So that's 2020, major crash. And in 1929, it went into a 25-year depression from 1929 to 1954. So this might, I hope I'm wrong, but this crash might stay down for a long time, which is really good if you're a professional investor. And so there's always opportunities, but you have to be smarter than the average person and you study it. If you don't study it, then it's best to just put your money in with a financial planner and let it sit there. But I wouldn't do that.